So as the market sell-off continues, so does this string of better-than-expected economic data, including today's read on September personal income and spending. In fact, income came in more than double Wall Street consensus, and spending was well above the estimate as well. Now, part of my investment thesis for 2021 is the power of the individual consumer, lower debt, massive savings, and just a little bit more stimulus. All you would need is a bump in confidence. Probably get that once vaccines are approved. This is one reason I look forward to investing next year, but I think the market will be even more selective than it's been this year. So for more on where the opportunities are, I want to bring in Point View Wealth Management's President, Chief Investment Strategist, David Dietze. All right, David, I got to tell you, the street is ignoring all of the great data, all of the great economic trends, which is fine because I think it bodes well for 2021. But for right now, this market, what do you think? Why is it under so much pressure? And where do you think the selling stops?
Yeah, absolutely, Charles. So really, as you point out, I mean, personal income up, spending up 5 months in a row. GDP had the biggest increase ever in Q3. So why the volatility now? Really, it's a trifecta. It's vaccines, it's stimulus, it's the elections. You know, right now we're looking at more and more COVID cases in Europe, lockdowns over there. We're really concerned whether it's coming here. That's not going to last forever because we got companies like Pfizer and J&J working very hard on the vaccines. The elections, as we know, we're going to hear more next week. There's some uncertainty as to when we'll get that final decision, but that too is not a long-term problem. And finally, stimulus. Both parties in Congress want to have stimulus. The devil's in the details. It's not going to happen before Election Day, but it will come too. So I think once those things coalesce, we're going to see a lot more money coming into this market. After all, interest rates are at rock bottom levels.
You know, but I still find it amazing because Wall Street feels 100% sure on all the things that you just said. And we're talking about all of that being resolved in a matter of weeks. I don't know. It feels like there's something more to it. I did read your investment letter from last week, and I could see where you were advocating for a rotation out of some of these mega cap names, these mega growth names that are getting hammered. So congratulations to you. Seems like you might have been positioned better than most today. Now, many are surprised, though, would be surprised, though, that since that March low, since March 23rd, technology, communication services, that's where you have those big mega names, they're not the absolute top performers, right? So value, though, here's the thing, David, it means different things to different people, right? So 1,000 stocks could qualify as value. What does it mean to you? And share some of your favorite value names with us, please.
Yeah, absolutely, Charles. So we see that tech has done so well, but that's been the problem because the valuations are elevated. That's why generally these mega cap techs came in with great results today. But for the most part, other than Google, or Alphabet, which has had the smallest gain year to date, they're all down big time. While a company like Chevron in the energy patch, they barely turned a profit with the low energy prices. They're actually up today. So for us, I think the way to make money here is look for value in those areas which have been beaten down as everyone has shifted to the stay-at-home trade or work-from-home trade, and look for the leaders that are going to emerge when we get back out of our shells here, the return to normalcy type trades. So I would look at industrials. Industrials has been an area where most analysts think that no matter who wins the elections, there's going to be more spending. There's going to be infrastructure stimulus. Industrials are very well poised from a point of view of valuation and in terms of responding to that stimulus. For me, it's all about Boeing. It's the #1 airplane maker in the world. At some point, we get back in the air. Remember, it's America's #1 employer. It's America's #1 exporter. If there's one stock that can respond to additional stimulus, a better economy, that would be Boeing in the Dow Jones Industrial Average.
Hey, I tell you what, my man, you put it out there. You took the weakest, most vulnerable, most disappointing stock of the last 18 months. I love you for it, David. Keep going. All right.
Yeah, so
that's
another one is
thinking.
Coca-Cola.
See you again soon. No, we got to go, David. We got to go. I'm sorry. We went over time, but it was worth it.